Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is June 7th, 2026, and we have an action-packed show for you this evening after a record day on Friday, a ton of headlines over the weekend, possible resumption of war, and it's going to be wild. So here's kind of the first look here at the open.
Wow.
And we're pricing kind of coming in here. I see
Holy shit.
Yeah.
I got some off.
well, I mean, there we go. So we're kind of all over the place. Well, the biggest mover I see here is crude up 3%. Not surprising given missiles have resumed flying in the Middle East with the attacks from Iran and Israel again. I'm kind of just waiting for an S&P open here. I apologize if you guys see something, you can just blurt it out. But I see the dollar bid. I see bonds a touch softer. I see gold down 6.5 to 43.57. We'll certainly talk about gold. It's been pretty weak. We've seen, obviously, on Friday, kind of a record-type liquidation day with the NASDAQ having its largest nominal point decline ever. Ever is a long time. We had a massive amount of put volume that traded, and so we got a ton going on. Bonds a touch softer here, but again, welcome to the Sunday Open. Extended panel this evening. Joining us from Southwest Florida, we have two of our favorites. We have Pharm and we have Blake, the Pipsar. Sara is here from Naples, and Pax checking in from Chicago. How is everybody doing on this Sunday evening? Hopefully everyone enjoyed the weekend, and hopefully everyone had a good Friday, because that was some record stuff.
Love the open, flatter than Chamath and a Speedo, right? I mean, there's just nothing, just absolutely dead flat, straight down. I actually missed Friday. We were moving into the new house, and that's exactly why this move took place. You just have to know that. If I'm away from the desk, crazy things happen. I stepped away right before the IB break, and that's when just everything went to hell. And it was a real liquidation break after I stepped away. It's good times.
Liquidation days like we saw on Friday, Craig, it was nasty. I mean, there's a lot of people trying to pick the bottom, and they're trying to catch falling knives or catch a falling piano. And after such a prolonged rally, it felt like it was due. And I guess the next question is, is this going to be a resumption from here? And we're faced with a lot of, we're faced with some data that it's probably not going to be market positive, which is going to be CPI later this week.
Yeah. Pax, how did you think about kind of Friday? We were talking pre-show just about how we all did and what it felt like. But I'm curious from your perspective. Obviously felt a little bit different, but it didn't feel panicky. It felt kind of orderly. So how did you see it?
It was a tremendous trading day, both all the way from the bonds to gold and the indices. It was a really great trading day. There was a lot of damage done on Friday. It was we were talking before the show, and I've been talking about this on Twitter with everybody on weekend, especially as the war started to seem to ramp up again today, is that if the war would have stayed, status quo and it had just been all quiet on the, Middle Eastern front, we'd still have a lot of downside left here. Not because it's overbought, not because we came up too fast, although those things are, probably true, and but just because there's a lot of things coming in right now into the market macroly that I'll let you speak on, Craig, that you're much better at, and Blake is much better at than I am. But just kind of look, put up a gold chart. Everybody put up a gold daily chart. 4420 is a 200-day moving average. This is the very first time since September of 2023 that we are trading under the 200-day moving average. Every time we came down to it, we bounced. 4100 was the 200-day moving average. We came down to it from 5636 and bounced right back up to 4860. And you guys can go back and watch any video that we had on Sunday night with me talking about the importance of that level, 4860. So now we're below it. That showed me that before the indices open, on the show the other day, and the bonds broke a point off the NFP number that this is going to be a gigantic drag on equities. And we opened on Friday, tried to push higher, and then sold off. It wasn't until after 10 o'clock Eastern, 9 o'clock Central Time when I got off the stream that we actually did start to sell in earnest. I mean, we had like 350 nano rotations lower, but once we got below 75.90 or 74.97 in the S&P, the selling picked up. The NASDAQ had, I think it was like 12, maybe 15, 65 handle rotations all the way down. That's the biggest point day, I think, that we've had in, what did you say, Craig? In how long?
Well, in the NASDAQ, it was ever. So
biggest one-day point drop ever.
Ever on a nominal points basis. Obviously, from all-time highs, but yeah, 1,100 handles. So the biggest nominal point day ever. Yeah.
So the interesting thing about that is that you're right. It felt orderly all the way down. It didn't feel disordered. It didn't feel capitulatory. It felt nice and easy. And the last thing I'm going to say before I'll shut up and let everybody else talk is we're heading into rollover this week. And anybody that's been following me since I started tweeting in 2019 knows the importance of rollover in the indices. Whatever sort of direction that we're trading in, that direction is going to be exacerbated. So if they don't save it, and I don't see how they save it, in spite of the boy that cried wolf, another deal. Nah, nobody believes it until the deal's signed. But the point is that I don't think that's enough to save it. We've got a lot of stuff coming in down the pike. CPI Wednesday. We have this week CPI, PPI. We have SpaceX. There's all kinds of things coming up. And we have rollover, and these markets have rollover has a tendency to exacerbate volatility. So be ready, be prepared, be careful buying dips. I'm not saying anything can happen, right? I mean, the markets can do crazy things and will remain irrational longer than you or I can remain solvent. So trade the price action as it is, not as you think or want it to be. Be nimble, be quick, and don't over leverage. Okay, you young full port traders. You're not going to be here long. As I tweeted earlier, it's not about how much money you make. Anybody can make money trading futures. It's not about how much you make. It's about how much you take with you when you're done trading for active income. This is a fucking marathon. It's not a sprint. You want to act like an asshole? Good luck to you. Please don't, okay? These markets, you can make a tremendous amount of money in it, but you need to keep it and you need to grow it. And very, very few people can do that. Okay, I'll shut up now.
Yeah.
Oh, man, brother.
I was just going to say for the last several weeks up until this week, I felt like we were getting into a little bit of a, I don't know if it was a little bit of a rut on the Sunday. It was just kind of a little bit, like the same. Like we were admiring the markets making highs kind of consistently, the buy the dip mentality, the tech trade outperformance, but with an eye on the exits. We were kind of sick and tired of talking about the Strait of Hormuz, and kind of noticed that. Not that it's not important. It's just that the NASDAQ and equities weren't caring about it. So it was really not that relevant. But now it felt like towards the end of last week and certainly on Friday, something changed. And I'm curious, Blake, did you kind of feel something change? Was there a fundamental narrative change in your mind, or was it just, things started to move, volatility started to pick up, and we had that kind of liquidation?
Yeah, well, it was actually the jobs report. I mean, the jobs report, it was a blowout jobs report, and we were covering it on Friday. And Pax, you were coming on as I was coming off. We were talking about gold. We were talking about strong data. And Tracy's like, yeah, they're going to bid up the as soon as the data comes out, they're going to bid it up and they're going to break it. They're going to bring it right back down. I'm like, absolutely, because you got this Fed chair that everybody's hoping he's going to be some sort of dove, and he may be, but there's a whole other committee that he's got to meet with, and everybody's looking at strong inflation, strong jobs data, and I think the market's finally getting it, and the market's finally starting to understand. And you were just saying something that was really interesting, Craig, and we saw the cracks kind of develop in the dollar, like the Aussie dollar stopped making new highs last week, which shouldn't have been the case when we were at all-time highs in equities. But looking around now, before the show, I was like, I haven't paid attention to volume in a long time, because just like you were just saying about you guys being in a rut, like on Sundays, look, the market didn't care about crap. They didn't care about anything. And the markets don't care about anything until it does. And when it does, it really starts to care. And right now, I think is when we all have to be extra defensive. We really need to start, stop being lackadaisical from an analysis point of view and a
Yes.
bias point of view,
Yes.
and really start to focus in and hone on what you guys have developed as traders. You know, your edge. Make sure you got your edge going into each trading day now.
Yeah.
Yes.
Sara, I want to flip over to you and your charts that we typically like to lead with, but you had been saying, and we had kind of been thinking about this idea that you really can't get negative until we start to see, violations of prior day lows, prior week lows, prior month lows. And we hadn't been seeing that at all. And then Friday came and now we have it. And so I'm curious, maybe you could just kind of point that out, but also what is the idea that it just happens kind of in that one day? Does that make it more important, less important? How do you think about it?
I've got a couple thoughts on kind of like what happened other than like the macro perspective. So last weekend we were talking about how we were going to get a new candle opening this coming week, and we did get that. And because May closed so strong, there was just no way that the market was going to turn around. It just kept its momentum. But whenever we get a new candle flip or new candle open, that kind of opens the door for a possible change in direction, possible continuity change, which is just, what color is the candle? So it's like strat talk, but obviously this monthly candle is now red. So we knew that it was a possibility for things to turn around in June. And then I think what happened is we started triggering a bunch of people's stops, right? So once we took out the previous week's lows and we went outside weeks, a lot of people had stops sitting there. And then it was just sort of like a cascade effect. And they just sold the shit out of it. And we kind of call this a pivot machine gun, which is just where you've got a bunch of higher lows and these are just stacked stops. So price can just fall through real quickly. And that's basically what happened. We did not take out this low yet. We will. 73.54. We're like sitting right on it right now. But if you look back at the monthly candles again, what you'll notice is we're only 1 week into the month of June. So we're starting week 2. We're trying to go outside month. So they're trying to come lower. And 3 out of the 4 futures already took out last week's lows. NQ did not. NQ is still inside last week's range. But that is considered to be a simultaneous break. So we've got 3 out of the 4 doing it. And so if we can stay below last week's lows, we're trying to get down there to the pink levels on my chart. So for ES, we'll call it 72. For NQ, 27,536. Basically last month's lows, because that's how outside bars happen, right? So we're unable to stay above the high. We start coming back through. We're trying to take out the other side of the candle. RTY is the only one that wouldn't be an outside month. It's just going to be an inside month because it did not take out previous month's highs. Now IWM did, but RTY did not. But still, it's trying to travel down to last month's lows. So I think, just kind of triggering people's stops, closing at the lows. This is the first time in a long time that last week we closed near the lows, because we've been closing up near the highs for like 9 weeks, like up at the highs, up at the highs, up at the highs, highs. A bit of a doji, but still green, highs. And then on Friday, it was like, oh shit, like this candle's red and nasty, like I'm scared. So I think it just kind of, people started just getting out of their positions.
Well, it depends on what side of the market you're on. It's how scared you are.
Yeah. Oh yeah. Well, Friday. Yeah.
I'm excited.
October 10th, people. This is just like October 10th. There was a lot to the setup that was very similar. I call it stacked boxes or a trapdoor setup. Like Sara said, once those stops start triggering and it's just stops stacked on top of stops, it can get ugly fast. I do appreciate the pivot machine gun once in a while as well. To me, there can be a pivot machine gun setup without necessarily having stacked boxes. This one had it all. And it basically set up cleanly on Thursday and then triggered it all on Friday. It's also similar to 1010, and then I'm going to shut up. I'm not going to do my normal 40-minute rambling. So PAX, it's not nap time yet. But the other similarity to 1010 is where the Friday's low
How would
came
you
down
say
to.
that?
I
No.
know, I'm just messing with you. But it's a big spot where we've come down to. So I'm actually not surprised that we're getting a little bit of a bounce here. I would have preferred a little sweep lower first, but it's very similar to October 10th.
Yeah. Go ahead.
Craig, you were asking a little bit earlier. You were asking me a question about see anything kind of leading us into Friday. One of the things, just talking about the dollar really quick, because the dollar, for most of you that don't follow the dollar, you should, just because it is the FX market's the largest market, globally. But the dollar, just the pullback had been really minor. It's interesting when stocks are usually high and they're we're in a breakout territory. You won't see like this 38% retracement. You'll notice that this 38% retracement here is really shallow. So once that data hit and we knew that it was gonna push the dollar into a breakout situation, which it is. This is a bull flag pattern that looks like we're going to be challenging the highs from back in March at some point, probably this week, especially on a strong CPI data number. If the dollar stays elevated like it is right now, you just don't want to fade this move that you're seeing in equities. This is the market is telling you we're going into cash right now. The dollar is the default cash market. It's the default what everybody holds as a reserve currency. While the dollar is bid, you should probably be thinking, unless there's a reason, unless it's a Fed reason, a rate decision reason, respect what the dollar is doing. Let that be the defensive mechanism for you with what you're doing in equities.
That is really good and very, very important. Now I know a lot of you are a lot of you guys that are listening are going to be like short-term traders. If you're short-term traders, there's a trade here that you could have taken tonight, and that's being short. The reopen is 73.68 in the S&P. You could be short at 73.68 and take them down for 15 handles, which you didn't quite get. Oh, you did almost, and then and you get long above 68. So now you're long again. Now you'd be long 73.68. That's a short-term trade. But if you're looking at big bottoms in this, you're taking your life in your hands, and knowing how the capital, knowing how money flows and how capital flows work. I'm not great at it. I'm not going to make trading decisions based off of it. But once I get positioned into the market one way or the other, you can bet that I'm going to try to understand it and see it, whether it's the dollar, whether it's, when gold sells off, dollars bid lately, right?
Yeah, pretty much. Yeah.
So, you take a look at that and you can see the dollar leading and you can see gold selling off and you can see what direction that's going to take with the bonds and with to your point, also, Blake, when you're talking about, the Fed decision, if the Fed cuts rates into this, we're going to be looking at 16, 17% 30-year mortgages in a couple of years again.
It could happen, man. Could you imagine? You do some of the technical work on yields and look at like a 30-year yield, and you start going, well, that actually points to a 9%. Like I'll just show you guys really quick. If you just like looking at the ZBs, like the ZB is like a breakdown in like the 30-year actually shows you that yields are going to go trade up towards 9%. Now that's just not going to happen. There would be some sort of yield curve control happening, but this technical formation actually does point towards 9%. I laugh about it myself when I look at that. I'm like, that would be ridiculous. But we've all seen ridiculous things happen. It usually happens in capitulations. You get the market that just can't sustain being long or short anything. We've seen it in crypto. We're probably going to see more, Bitcoin sales, because longs just can't hold on anymore. And you got the bond market, which is default what a lot of countries are selling their U.S. treasuries just so they can buy crude oil at this point. So it's crazy moves are developing.
Yeah. The story really last week was less about the war. It was about, in my mind, it was two things. One, Google raising equity for the first time in forever, really the third time ever. Their IPO once in a few months or years, closely after they had their IPO, and then last week. Google has the ability to tap the debt markets almost infinitely and decide to raise equity, right? And why did they decide to raise equity? Because the price was good, right? Their valuation is high. And for Google, they basically were able to get it done at a price, that the stock was trading at a few weeks ago. So for them, they got a great deal. Now they front run SpaceX, they front ran Anthropic, they front ran OpenAI, all of which need to raise equity this week or in the next few weeks. SpaceX this week. And then on Friday, they mentioned Meta might be looking to raise equity. Now it's going to be, the narrative is going to shift to who's next, which companies are going to raise equity, which companies are going to hit the bid. The second thing was Broadcom, obviously, right? The numbers there, which were good. The outlook, not as good as expectations. Stock gets smoked, trading down, below kind of May lows and February, right? We're getting some technical damage here in the tech store. If you pull up, just shift over to my table here, you can really see what we have been talking about, the dispersion and the tech outperformance. I mean, Friday was just a bludgeoning, right? I mean, semis were down 9% on Friday. XLK, the tech ETF, down 6.5%. The Qs are down close to 5%. Software down 4.2%. But it wasn't uniformly negative, right? I mean, staples were up, utilities were up, real estate up, healthcare up, banks up, right? We saw a bit of rotation out of things that have been working into things that hadn't been working amidst kind of that equity sell-off. So it's just interesting to see where the positioning was. We knew where the positioning was. We've been talking about it for weeks. All the call buying into the big tech names. And as the call premium started to get hit, there was forced selling. Dealers were able to sell, take down their hedges, and that kind of was a 1 + 1 + 1 = 10 type dynamic, exacerbated by the leverage ETF flows, which were enormous on Friday. These double and triple levered ETFs. The AUM on that's above $200 billion now. They're daily rebalanced. And so when we have those big down days, you start to get massive for sale volumes. We saw that take place on Friday for sure. But
hey, Craig, can we please just talk about like the SpaceX IPO and how historic this is? I mean, yeah, we have to, but along the same lines of everything that you're discussing right now. I mean, back in the day, I say back in the day, I feel like, I'm in my 50s and I started trading in the 90s. So in the mid 90s is when I got my license in 95, right? So my Series 7. So back then we used to always joke around like mom and pop. As soon as mom and pop retailed, mom and pop's in, it's over. Shoe shine guys in, whatever you want to say. Pax probably knows a lot of different analogies of what you could use. But look, there are no mom and pops nowadays. Mom and pops are Reddit traders. It's you guys and us. We're retail. We are the mom and pops. So when you shift institutional money from I'm selling $1.75 trillion worth of SpaceX and I'm dishing it out to investors that have a $2,000 account balance at in what's the name of Fidelity or Robinhood or whatever. Yeah. That is literally passing the hot potato to somebody else. That is literally giving it all to retail and saying, I'm out. And that is scary to me. I'll let you guys elaborate on that because it's crazy.
Yeah, look, I mean, and before I get to that, I just want to remind everybody, please like and subscribe to the channel if you're new. It really helps us out here kind of creating this type of programming. And so we definitely wanted to make reference to that. But again, there are various economic actors in the economy that respond to price. And, typically it could be governments who are responding to inflation with moves on, interest rates, but it's also corporates, right? And so we've been talking about the flows every morning on the morning show, how supportive they've been. But when you start to bring in all of this equity issuance that's coming from the AI trade, it needs to be funded from somewhere, right? And so it's not only is it a narrative thing where the retail guy, the bag holder is coming in. These are massive amounts, right? Between Google, Anthropic, OpenAI, and SpaceX collectively, raising over $300 billion, it would be the largest IPO month, quarter in the history of ever, right? So, yeah. I mean, again, this is a massive amount of stock that needs to get placed. And, what we learned on the SpaceX and for the others is that S&P is not going to include these names. And so the passive bid is not going to be, as robust as maybe people were believing is going to be. NASDAQ will allow them to be added passively in the next 5 days, and they'll be part of the Russell reconstitutions as well, which we'll talk about this week. We got a couple of good guests on coming up with Anthony. But The S&P won't. And so that means that it needs to be funded from somewhere else, right? It needs to be taken from the other exposures that investors have to these big tech names. And so now you can get pure play names in the AI trade. It comes out of the hyperscalers. It comes out of some of these other names. And so, when we look back and we say, was it the week before the SpaceX IPO that put in the all-time high? I mean, who knows? But, from that narrative, I mean, we've seen it before, right? We saw it back in 2007 when Blackstone did their IPO. We saw it in 2011 when Glencore did their IPO at the peak of the commodity market. We've seen time and time again these historic IPOs that happen when sentiment is as robust as it is for a particular space. We're kind of here now, but curious how you guys, Pharm, how are you thinking about this SpaceX IPO?
Yeah, it definitely matters. It's supply and demand, right? It's very, very simple, right? This is a lot of supply that's coming to market between companies just raising cash, the existing companies becoming public. That's a lot of supply that somebody's got to take on, right? Where's it going to come from? And so this is the first time that we've really seen some kind of meaningful supply come to the market in like quite a while, really. I mean, obviously it's the biggest ever. So whatever we've looked at in the past hasn't mattered. But yeah, really, like any of the big IPOs, like I've joked, like Reddit had an IPO and it was coming out. And I was like, oh, okay, cool. Market's going to top when Reddit IPOs. And like it did. I mean, it was only, I don't know, 5-6%. But like these big IPOs, they matter. And this is the biggest. So I definitely think that's a contributing factor for sure. Whether it was the whole reason for Friday, I don't think so. But it's going to be a continuing issue because it's not like they just stop issuing, right? I mean, they're only going public with a certain portion of the float, right? But then you get unlocked, right? So it's like you're going to get a continuous wave of supply hitting the market. And what happens when supply exceeds demand? Well, price go down. So it can be a problem. So we'll see what kind of tricks they pull out of their bag to try to stick safe that thing with respect to SpaceX, anyways.
Yeah. Pax, do you think this is kind of historic, legendary? Like we're going to look back as this is a huge paramount moment when SpaceX came out. Kind of, as you think back to your career, were there other types of these seminal events that led to changes in sentiment, led to changes in the tape? And do you think that we're here right now, or are we was it just trade it one day at a time?
Oh, I'm just going to trade it one day at a time. If we trade, if it trades under its IPO, if it trades under its opening price, that could mark a high here. That'll be, as Tracy said, non-bullish. That'll be very non-bullish. But I'm not going to try to guess whether or not it's going to be good or not. Jack had asked a question that I think would be a decent thing to toss around a little bit. But anyway, from a trading standpoint, I'm just going to take it as it comes. Jack had asked, why is it concerning that retail would be so heavily involved in it? And the first thought that I had was that I'm finishing Aaron Ross Sorkin's book. Not my favorite person, but a very good writer and a very interesting book called 1929, The Crash of 1929. And one of the things that was so difficult about the crash of 1929, and one of the, calling somebody. Sorry, I hit my cell phone in my lap and it called my friend Rob Crucioni. Sorry, Rob, I'm not really calling you. It was an accident.
That was literally a butt dial. Actually, it might have been another type of dial.
Oh, look, and he's calling me back. So anyway, I thought he was in the show. He told me last night that he was going to be here listening. So anyway,
hey, Rob.
Yeah, where are you?
If you're watching the show, we'll hit the gay bar later.
Put your harness on. Put your leather on. I don't think I'm supposed to say that. I'm so sorry I said that. All right, but anyway, it's bad. You get a lot of people involved, and a lot of and if it doesn't come out right, people don't know how to manage their risk. What's the stat on greater than 50% of the U.S. population don't own a share of stock either through a 401k or pension plan or anything. They own nothing. Now that means that the majority of the bottom 40 whatever percent that do are going to be $2,000, $5,000, $10,000 fidelity accounts, or their 401k plan that's wrapped up in it and things like that. And if there's a big downturn, I think it could be dangerous. But irregardless, or that's not a word, or is it? Regardless, I'm going to trade what is in front of me. I'm going to stick to my process, and I'm going to continue to take what the market gives me and leave the rest. I've been out of the market for. I have not. I'm kind of at the tail end of my trading career and trying to start my prop group and get that up and running and but there are times like Fridays, like Friday's trade, that it demands attention and it demands action. And there have been some of the momentous rallies that we had that also did the same thing. But when everything lines up, when the capital flow lines up with with the market momentum, and that lines up with the technicals, and that lines up with your position, those are positions that make your month, make your quarter, make your year, and in some cases will make your career. But you've got to keep that money, and you've got to go back to the grind, find those days, survive to get to those days. And when you find them, then make them work for you. Last Friday was one of those days, as long as you traded the market as it is, not as you think or want it to be.
Yeah.
Yeah.
More money. You're asking about Bitcoin. We're definitely going to get to Bitcoin later on in the program. And then stay tuned at 7:00. We got the great panel on the crypto closeout with Trader Mayne and Ponzi Trader. They'll just go through their views on the Bitcoin as well, which has clearly been in the trouble zone for sure, and has really been disconnecting from the equity market strength for quite some time here, and kind of really struggling, although it is up over the last 24 hours. But I want to just throw this little tweet up here before I kick it back over to Pharm to see his charts. But folks have been talking about the lack of volumes potentially, and that we're really didn't see necessarily in futures volumes or in stock volume on Friday. We did see an all-time high put volume reached in the S&P 500 on Friday. So it was a massive volume day. It was a historic day. I mentioned the nominal change in the NASDAQ being a record. 64% of this volume here was zero data expiry options. So, we're talking about just massive trading volumes. Much of that came off the board on Friday, but a ton of it still left on for this week here. And so it'll be interesting to see how we respond. But Pharm, what's your view here on the setup for this week and some of the damage that was done last week? Is it likely to continue? What would you need to see to make the case that we've kind of firmly put Moon more of a top here?
Right. From a technical basis, the first thing is that, when you're in the midst of a liquidation break, levels don't matter quite as much. The minor ones, the big ones, they matter. But really what matters is when the liquidation event is over. And once it is, there will be a ferocious rally. I'm not necessarily saying back to all-time highs, but if we sell off like this for 2 more days, there's going to be an absolute piss missile back to the upside. There just is when positioning snaps back. But I mentioned that we came down to a big spot. So I've got the ES chart up, and this is a profile just running from year-to-date lows to current. And so just, touching on the trapdoor setup, how we got here, and then where we're at now and why it's so important is, we had this 2-week range here that we had a sluggish break to the upside. It was cleaner on NQ, right? Consolidation range, that's a box. Consolidation range sitting right on top of that. So we talked about how, you give one of those up, and then you start triggering, their stops blow, right? You got stops blowing on top of these guys. They're all coming back to their break even. So it's the pivot machine gun type thing that Sara said. He knows where it stops, right? It came down to the 2-week balance low, just about, right? It was 54 and a quarter, I think, was the actual lowest low on a cash hours basis, which is what I look at. But you can see it came right down there. If you look at the profile also, you've got a very clean, and I just kind of squiggled this with my thumb, I think, before we came on here, but you've got a really clean area of volume here, high volume node. It's an area of distribution and balance. And we've come down right towards the lower edge of that. So giving that back would be suboptimal for bulls, right? But for now, it's kind of a range low until proven otherwise situation for me, which is why a pop didn't or wouldn't surprise me. We're up like a little bit. It's basically flat here. But absent being in the midst of some huge liquidation break with everything that's going on, if we came down here and swept out these lows and then started reclaiming those prior weekly lows, I would be so effing long, like it would be ridiculous. It's a fantastic location, technical setup, and it doesn't mean anything if the liquidation break is not over. I think the fact that we're trading higher first, it makes this a really, really awkward situation. And I'll flip back over to my normal weekly profiles. Look how thin this is I mean, I don't even know. There's like 69 sets of single prints between ES and NQ on Friday. It was ridiculous. So we can do what's called a structure repair mission. We just float up and everybody's max bullish. And then, another wave of selling comes in and just dumps it on your head. And that would be terrible, right? The flip side of that is that we've seen this just like October 10th. It came down and hit like almost an identical key technical area. And then everybody wanted to short it, and they wanted to short it all the way back up. And then, you sell it, and then it keeps going, and you sell a little more, and then it keeps going, and sell it a little more. And then all of a sudden you say, well, shit, I just missed a really good long, right? So like, I tend to think this is gonna be a hard week, right? Especially in this type of scenario where like, okay, we kind of took out last week's low on an ETH basis. There's some weight to that. But coming off this area, what the hell do you do? And like, when do you sell them? Because you don't actually get into too much supply until, you're up a lot higher. So to me, it's a situation.
What prices, Pharm, what prices are you talking about?
In terms of the bottom, like the lows that would need to break?
Yeah.
Or so to me, I'm using 73.45 to 73.50. The actual bottom of this multi-week range is 73.54 quarter. But I tend to think 45 to 50. And then below there, I'm going to switch to an RTH chart real quick. We saw that bull gap, right? So we saw that RTH bull gap. So in theory, if you could, dip below in there and you find a reactive bid, and again, you reclaim all this, you must reclaim, then it could be constructive. So to me, like, it's actually more bullish to trade lower first and fail than it is to just kind of float higher, right? Because then it starts to look like a retrace that's going to get stepped on at some point, but you got to be patient if that's going to happen, right? To me, I would rather see, if I'm going to flip long, I would rather see a push lower, maybe a failed push through this 73.45 to 73.50. I would be more, at least see it this way, I would be more convinced that a rally could be durable if we see that first. Whereas if we just kind of like float up all night or something, I'm going to be like, I'm not sure if I buy that. But that really applies for all week. And like back above this 75.15 to 19 and 75.31 to 34, it's over for bears. Nothing ever happened. So what'll happen is most likely we'll consolidate in this range, maybe even as high as 74.78, 78, 74.86. Basically kind of the upper edge of that prior 2-week range. We went higher, but I mean, most of the volume was in there. If we build out volume down here, that's 130 handle range. That'd be fun to trade. We could do that before making a decision, but generally a clean break to the downside of 73.45 to 50 that fills this bullish gap. You don't want to see it get back below 72.98 to 73.02 because that opens a move for another 100 handles fast. That's another trap door that's just kind of been in my pocket with alerts set. We could come 100 fast there. And I will say that this is the year-to-date low VWAP sort of curling up into that 72.06 to 14 range. So that would be a spot where I'd at least be planning to cover some anyways, right? Certainly a day trade short that could be reactive. So to me, it's all about like this 73.45 to 50. You mark out the prior weekly lows, 54 and a quarter, 63 and a quarter, and then last week's low, 79 and 3/4. So absent a break of those, we're going to do structural repair. We'll float up. We'll test some of these levels higher, maybe this 74.49. I like this 74.78 quite a bit to 86. And we see what's up. And then, but if it rolls back over and it gets going, like it's going to be obvious, right? Like Friday, like once we broke the IB low, it was obvious, right? It may not have been before that, but I mean, you can see the acceleration after the IB low broke and that prior week's range broke. It just got nasty. So I see this as being
IB?
Initial balance range of the first hour. It's a strat term. You just didn't know it. So, right. So your cash
Well, I
hours,
was thinking
1
inside
hour.
bar, and I knew it wasn't that.
Yeah, no, your RTH 1 hour, right, would be your IB your first hour, right? So, you get that break and everything's aligned because, like you said, we talked last week about sometimes it's more bearish to pop a prior month high, prior week high, come back through range. We put in that volume. It did exactly the most bearish scenario. Does that mean I expected Friday necessarily? No. But the setup was there on Thursday afterwards once we had those very, very clear stacked boxes. I'll do NQ real quick and then shut the hell up. It's very similar. Again, you see kind of this nice happy range. It's been, I'm sure a lot of people remember this 800 to 817 spot. That's been an absolute monster spot. I kind of love I would want to see these lows taken. I just kind of have a thing for that. I don't know. I just like people getting stopped because I'm mean.
Because that's how price. Yeah, you should want that.
Yeah. But I mean, yeah, so it's the same deal, right? It's coming down. It's at a big spot. It doesn't matter in a liquidation break. If this is not over, none of this matters. It's just going to butter through if they're not done. I've heard some things like I'm not going to claim to be like the guy that knows stuff like at all. But you heard a lot about, swaps land, South Korea, all that kind of stuff being like wildly over leveraged, being flipped to sell only. I don't know. But if they're not done selling, they're not done selling, right? But relief pop does not surprise me at all after a move like this. We go on a structure repair mission. Okay, fine. And it's kind of a nice trading range, right? 29,469, let's call it, down to 28,800. So we could consolidate in that range before a larger decision is made, and that wouldn't surprise me. And if I can get my damn Zoom to stop keying off there, I got to go to ETH hours, and then I will shut up. Same deal, like we're close, but not quite to the bottom of that prior 2-week range. So generally, it's not the best place to be initiating like a swing short, like a new swing short after a move like this. So same type of deal, lots of levels that you can screenshot, and they seem close together after Friday's move, and kind of are. But generally, I would say like this, the 469 to 487 is going to be key. And then this 800 to 817 has been a monster. And that would be a key reclaim as well if lost. If we do lose that, you can see it's pretty thin down. We had another RTH gap that I'll flip to on NQ. So NQ actually had two. So below 28,336, same type of deal. Like it's probably gonna be reactive, but like it's hard to long it though, right? Because I mean, you still got to come all the way back up and catch this week's low for like any kind of a strength, right? So I'm not knife catching if we're continuing lower at all. And I'm not even necessarily being long if we float higher. I mean, it'll be long for a session, right? Like Pac said, like you can still take a long on a short time frame. But it's going to be a guess. Like, where's it going to roll over? Is it going to roll over? Are they done? And so I think it has potential to be tricky. There's going to be a lot of people that short it for like a structure repair mission and keep getting run over. And then if we go lower, people are going to keep trying to long it, trying to pick a bottom and get run over. So should have a lot of resets on those prop accounts this week. But the second, so first gap, you get a fill at 28,151. It's got this second one down here. Where's that baby gap? Yeah, right here. This 27,941 to 27,969. So it doesn't quite have that second trapdoor setup on NQ like ES did. But my final words again, they're kind of reiterating, like, I mean, if they keep liquidating, don't step in front of it. I mean, they're going to finish and there's going to be an amazing long afterwards. But if they're not done, don't stand in front of that train. And then if we keep doing this and we keep floating up, just mind your session, trade the session that's in front of you. Like everybody has always said, right? If and when it flips over, whatever level it comes from, you can monitor the pace of the action. It's going to be unmistakable if you were there Friday. When you see that kind of panicked offer come in and you're just buttering through levels, none of it matters, kind of emotional selling. And don't stand in front of that. So that's kind of where I'm at this week. It's a big spot. It's a very binary. I think things change interweek, or even like session to session, right? Like this could look bullish. We could come all the way up here and be, at 29,469 by morning. And like, I wouldn't be surprised. And it could completely roll over and go back to news after that. So I think keep an open mind, don't marry your bias, or it's going to be a good week for those reset accounts.
I know I've been hanging out with Pharm too long when he says something like, eventually they're going to finish and then it's going to be an amazing long after. And then all my head just went completely into the gutter from what that actually meant. It's really just horrible. But 40 or so minutes into the Sunday open here, equities a touch lower. S&P 7387, NASDAQ 28970. Down 20 basis points, or Russell down 25 basis points. Bonds are a little bit lower. My cat just knocked something over. Gold 43.50 down 36 basis points. Oil up 2.7% to $93. It's an action-packed week this week. Heavy macro calendar. Kind of quiet tomorrow, but on Tuesday, the NFIB survey and 3-year auction. Then on Wednesday, as Blake mentioned earlier, the all-important CPI print, followed by a 10-year auction and the Oracle earnings after the close. On Thursday, we have initial jobs claims and the PPI, a 30-year auction, and Adobe and SpaceX IPO, which then trades on Friday for the first day alongside UMISH consumer sentiment. Importantly, also on Tuesday, we have the Arena Cup final edition. Yeah. 13 traders are going to be competing head to head. I think a couple of you guys are in this, right? Pharm, Sara, you guys are you guys are in that on Tuesday.
I'm streaming.
Yeah, awesome. It's going to be exciting to watch everybody take part.
Pharm, what time are you on?
I don't know. I better look. I'm just getting settled into the house. So
I think I'm on 11 to 1.
I think they wanted me to be on at the same time as you and talk trash again. I'm looking forward to that. I feel like I'm earlier though. I might be earlier. We'll see.
I'd prefer to be earlier. 11 to 1's kind of neat.
But Tuesday, a lot of that data on Tuesday, and you have that auction actually coming out there's a 3-year auction at 1 o'clock. So yeah, it could be something interesting. But Sara, I wanted to just flip back over to you on gold. I'm curious, gold's been, and Pax kind of mentioned it earlier, the pressure it's been under, kind of not doing what folks thought it was going to do in the geopolitical uncertainty that we've had. But a massive payroll print on Friday, bond sell-off, dollar rallies, gold gets hit. It doesn't really look great for precious metals. What are you seeing there?
Well, yeah. So we are still stuck in that, what is this month? March, in that big outside month from March. We're still.
It's June, Sara. It's June.
No,
I know. I'm sorry.
No. This is June. This big candle back here is March. Thank you, though. So we're still trading inside of that, but it looks like we're trying to come down and take out last quarter's lows, which would be very not bullish, as Tracy would say, for precious metals, because as we were talking about a pivot machine gun, you've got a giant pivot machine gun on the quarterly chart for gold, because it just kind of rallied, for 2 years, something like that. So if we start breaking previous quarter's lows, stops are probably going to start triggering, and selling will probably speed up, but still just kind of not too, not moving very much right now. What did it do on the week? Yeah, it's just kind of been just slowly just kind of doing nothing. And I've been saying I'm not interested in gold or silver because they're just kind of trading sideways, stuck in ranges really for the most part. Like, we've been sideways this whole time since back here again in March. So I have no interest in them right now till we can get outside of that or start breaking previous quarters lows. Then maybe I'll get interested again.
Yeah. Blake, have you been trading precious metals at all?
Yeah. And matter of fact, I look at gold. I was talking with Pax on Friday regarding gold, and I'll just go up and pull up my chart really quick. I love harmonic patterns. Harmonic patterns are just like some of my favorite, like reversal patterns, but also continuation patterns to look for. And gold has broken its, as Pax said earlier, we broke the 200 DMA, and then once we broke below the 200 DMA, that kind of opened up the ability for it to trade back below 4,000. I think that's where it's going to really trip some people up, because that'd be like a butterfly pattern. So when a pattern turns from a gartly to a butterfly, that's a big decline from here. And I suspect that how many stops are going to be below 4,000? How many like long liquidations are going to happen when or if that happens? So yeah, I think that's where we're going. I would be looking to stake a claim somewhere below 4,000 if we can see it.
Mm-hmm. I'm with you. I am absolutely with you.
Yeah. I mean, U.S. economy strong, payroll's good, real rates moving higher. Just not a great fundamental backdrop for oil. I'm sorry, for gold. So no surprise there that you see the fundamentals kind of aligning with the technicals, and positioning I think has been semi cleaned out, but there's really there's no impetus here to see the bottom in gold until we start talking about liquidity being added back in, right? And so right now we're talking about liquidity being drained. Kind of a tough setup there. I think that's part of the reason why Bitcoin's been struggling too. So
Craig, this is a rate trade too. I mean, as yields go up, gold's going to be going down. So
it's an inflation trade. Yeah,
it is. Yeah, and it's funny you say that, Pax. I mean, we've been trained for decades that gold's an inflation hedge, but no, it's actually a reflection of yield. So
100%.
That's exactly where it's at right now. Hey, can I just show you guys really quick just the S&P, Pharm, you were saying something about really key level. I just want to make sure you take a look at like get like the longer term perspective, just because you can see that we've retraced basically 24% close to. And I'm assuming we're going to test that tonight in European trade and Asia. Asia's waking up. Nikkei, all the guys in Japan and China and Hong Kong and Korea, they're all waking up, looking at the markets, going, "Holy crap!" And they're going to be trading here in the next couple hours. I would assume we're going to be testing, if not breaking, Friday's lows. But really, I try to game it out for the remainder of the week. If you think about where CPI is coming in on Wednesday, people are going to try to gear up for the SpaceX IPO like midweek or so. You know how you get this, let's just say you get some strong CPI that comes out on Wednesday, everybody starts buying dollars again, and then you get a reversal and you're like, why did that happen? Well, you have to fast forward to like Friday. Everybody's going to try to position themselves there. I actually think that if you're going to look at a place to be on the long side of the S&P, and you're looking at the futures, I just have a continuous contract up right now. You just look at like 7150, roughly around there is a 38% retracement. You're gonna be probing the the 50 DMA at that point. It's going to be the previous channel. You can see it right here. I think those levels are going to provide a lot of potential areas for buyers to step in. But you have to be really careful this week. I think this week's going to be kind of nasty. And like I said, over the next couple hours, when Asia shakes off the cobwebs and they start doing some risk management exercises at trading desks, you might see some more liquidations as we get into Asian trade tonight.
Yeah. I am with you. I'm absolutely. I got no pushback there. I absolutely agree with you. And the unwinding of the AI trade a little bit, right? We're copper's getting whacked, silver's getting whacked, gold's getting whacked, Micron got whacked. All of this shit is setting up an interesting tape. There is just a lot of I may have said this the wrong way on Twitter earlier, but there's a lot of risk. The risk is to the upside. I think you want to get long here. I think you're going to choke your kartoffels off. We really may. I mean, this could turn. And I think it already has started to turn, and that's what we're seeing reflected in the price action.
And Pax, you can't dismiss seasonality. And think about where the market was at literally when we all figured out, hey, Trump's not going to. He doesn't want to do it. He doesn't want any more kinetic activity in Iran. I mean, that really put in the bottom in the S&P, and that was like what? How many? 20-30% ago. If you're looking at the SPOOs here, let me just pull up the SPOOs really quick. I mean, when you talk about the lows that were set back in March here, at beginning of April, you had a 20% rally off of those lows. Mm-hmm. I mean, we're gonna see some of that come in. It's summertime. This is sell in May, go away. We're just like I said on Friday, sell on June 5th and go away. Remember when I said that?
Yeah.
I mean, we're selling June 8th.
Funny.
Yeah. I mean,
and true.
We're probably going to see some seasonality. But anyway, sorry, I didn't mean to.
No, you're 100% right. And I was chatting in the chat with CME Pit Trader. I mentioned this earlier. This is the beginning of roll week, and we also have a Fed meeting going in the roll week too. I'm interested to see at the end of roll. I'm interested to see what kind of dissents, or what kind of conversation is going to come out of this. This whole thing is interesting, and talk about a blow off top in equities. I'm not saying that that's a top. I'm not that bold. But I am saying that the way that man alive, the way that every day was just another day higher based on what? Open interest didn't grow substantially in the S&P. It was just every day was another high until it's not. And based upon what? Well, I think now we've got seasonality into play. We've got all kinds of different things into play, and we've got rollover, and all kinds of crazy shit happens during rollover. All kinds of crazy things are going to happen.
Do we have like a full moon coming up or something like that? Maybe an eclipse or something, just to throw on top of the Bobby.
If you'd have seen me Greek dancing last night, you would have thought there was.
Hey, just again, I've just pulled up semiconductors, dude.
I was literally just gonna point that out. I mean, you maybe not have seen the volumes in the bubble in the S&P, but I mean, look at the Micron chart, look at this, at the SanDisk chart, look at the semis chart. I mean, the call premiums were exploding higher for weeks and weeks. The FOMO was real. And there was a sign on Wednesday when we started to see some of that call premium come out. It's kind of a little bit of an early tell there. I pointed that out during the week, and you kind of, you saw some follow through, and now you have this, as Pharm mentioned, maybe some of this Korea stuff. I mean, Hynix is the double levered ETF on SK Hynix, which is a Korean semiconductor memory name. Is one of the largest AUM ETFs in the world. Trades in Hong Kong. We'll see how that trades tonight. So, it could be it could be quite interesting there. So.
I mean, look at this Korean move. I mean, this is insane. I mean, this is just the Kospi is just, and I know they make a lot of semiconductors. I get it, but really since March, semiconductors rallied 95%. The Korean stock market rallied 75% in 3 months. Come on, guys. I mean, it's crazy. I mean,
that is crazy.
It's bananas. It's bananas. The signs are here, and that's why when I know you guys want to buy dips. I know what the trader propensity is to do is you want to fade a big move, right? You saw a big move on Friday. The first thing you want to do is you want to start buying, but you have to just take a look at the bigger picture. Understand where the break points are. If you get much below Friday's lows, cut your losses. Step in find a different level. Like, just manage your risk carefully around here.
Hey, the bond. Let's not forget the bonds. The 30-year bond needs to get back above 112.28 in order for the indices to have any kind of rally. The bonds need to start. The bonds need to find a bottom and hold it. This is not acting like that sell-off Friday, and the fact that they're not bouncing at all. We're below Friday's low is not strong. This is the overnight high is a pretty good spot for us to stop in this boost. I'm not watching NASDAQ very closely.
And as I mentioned earlier, there is a 30-year auction this week on Thursday, 10-year auction on Wednesday, and both of those auctions are going to come after the CPI, which is 8:30 in the morning on Wednesday morning. So it's going to be a hot CPI print for sure. Even the administration has been talking about 1 to 2 hot CPIs coming. So it's going to be hard for bond investors to get excited about that offering here. But
do you buy a 30-year or do you buy SpaceX? What do you do?
Yeah, exactly. I mean, this is a crazy catalyst, potential catalyst week across various asset classes, right? You have supply coming with SpaceX, you have supply coming with treasuries, you get the CPI print, you have all the geopolitical stuff. Since we've been on the air, Trump has, had an interview with the FT and is talking a ton of different headlines about a variety of different things. So, and we went 57 minutes. We didn't even mention oil. Which is up 2.5% here to close to $93. Pharm, any last minute thoughts here on the oil chart? As kind of we close things out ahead of the crypto closeout at 7 p.m.
Let's take a look. That is not the template that I wanted. Let's go over to crude. Haven't looked at it a little bit. Oh, it's right at the war is over versus a little bit more war level from a few weeks ago. Yeah, it looks like a little bit of an internal broadening formation here after taking this, early May low and then reversing back through this range. I do like it a little bit above this 91.69 to 93.07. You're going to want it back above not last week's high, but the week's high before there. And I see a lot more strength above 97.69, 98.20. And then these aren't updated levels, so I'm just picking out the ones that look like they matter. And this 102.69 is big as well. But I mean, it broadly has been choppy and made for like some good day trades. But it's mostly been inside what I would say is a decent low and a decent high. And so I start to look for those internal broadening formations to look for potential expansion in the other direction. So you get this consolidation and then you get attempts at expansion. Those attempts at expansion fail. And then it can come back across the other side and take the stops on the other side and then rinse and repeat until it makes a broader decision off that high and that low.
Yeah. Pax, last word to you.
Manage your risk. Yeah,
Yeah,
just manage your risk carefully this week. Pharm said earlier there's going to be a lot of prop trader resets this week. Manage your risk accordingly. Okay. There will be moves that there will be big swathy moves that you're going to be able to catch. Just both on the upside, I suppose, if you're a knife catcher, maybe. I mean, on the downside, and if you're knife catcher on the upside. But just manage your risk and get some sleep. This is going to be a busy end of the quarter, I think. Very busy end of the quarter.
Yeah, for sure. I mean, and definitely just to Blake's point from earlier, just that the payroll print on Friday was a seminal print. So keep an eye on prices. Do they retrace back to where we were at 8:30? Do they move through it? Do they go? So I think that'll be an interesting level to keep an eye on as we push through the week here. But guys, it was a pleasure hanging with you again for the Sunday Open. Thanks to our special guest Blake Morrow joining us this evening. Was a lot of fun, guys. And so let's kick it over to the boys on the crypto closeout. We have Follis and Ponzi Trader. Let's get cracking.
Hello, hello. Welcome back to another episode of the Crypto Closeout. Today, my host has left me behind to rot away in these horrible market conditions, but it's great because we replaced him with the one and only Follis. Follis, welcome to the show. How are you?
How you doing? Great to be here, as always.
Oh, I can't complain. Besides the price of Bitcoin, which over the last 7 days since we've last been together, it is significantly lower. And quite a matter of fact, it's finally starting to get a little bit of relief here. And we should have a really exciting week, as we heard our colleagues saying on the hour prior.
Yeah, for sure. It's an interesting market for sure. I think that the move down seemed to catch a lot of guys off guard.
Yeah.
I'm wondering, were you in that camp, or was it something that you were expecting?
No, I was pretty vocal about staying sidelined. I did try some early longs, maybe one or two small, but I ended up, walking away from them pretty easily. I did catch a big short on the Qs and most of the equities on Friday, but unfortunately, I don't size equities how I size crypto. So the P&L wasn't super exciting, but we had an incredible sell-off across the entire board. I mean, look at this. This is a beautiful chart to look at. I think I entered right around 7:35. I closed at 7:14. Probably should have held a little bit longer, but we are in an interesting market dynamic where, as of now, the trend is your friend, and this is the trend. So probably makes for a good bounce back up to the equal highs. And that goes for most assets. I'm starting to feel a bit more comfortable with BTC longs, but not quite. I still think we will get a chance to long a proper send off to below 50. But we still have some really good setups going into this week. And we kind of just saw that with this war escalation headline, followed by Trump claiming he's the one who makes the rules, right? And protecting what comes next. We do have an interesting day today. We got an exciting guest coming on in the next 13 minutes that is a great representation of one of our best sponsors, Kraken. Shout out Kraken. If you are trading on a centralized exchange or you're not yet, Kraken Pro is probably the only place that would make sense to do so. But with all that being said, Follis, are you in any positions right now?
Not in any positions currently, but yeah, I think what you just said there about Trump is really interesting. I mean, what a great kind of example of how difficult this market has been to trade for, for headline traders, right? We saw the headline that I saw at whatever it was, 8 p.m. was missiles were flying and there was escalation in the Middle East and between Israel and Iran, and then 30 minutes later Trump came out and said we're getting closer to a deal. So I mean, that's the first point I'll make, is that we're trading in an extremely high risk environment, news risk environment, headline risk environment. It's quite hard to have conviction. You mentioned size there. I mean, I don't think I've taken any trades with the same size as last year, this year, because I just haven't had that same level of confidence in the market, that same level of confidence in, I guess, the price action playing out as I wanted to. But I mean, yeah, you kind of said there that, we're maybe due for some relief here. I think the Bitcoin chart is really interesting. We obviously saw this huge sell-off, between kind of the start of May and coming on about 30 days now. We've just been going down a straight line. Very interesting point now because we've put in a new yearly low. We swept this February low. And it's one of those things where, I'm kind of making the point to my guys, that, the time to be bearish and the time to short BTC was when we were, putting in this distributive PA at the highs here. We kind of, something I mentioned to Mayne on last week's call was we were trading into this very high time frame resistance at the start of May. We had the daily 200, the daily EMA 200 coming down here. We had just filled part of the inefficiency left by this big move down. We had just tagged into the upper 50%, the premium of the move down. We had just tagged the November low, and very often you'll probably know this, but markets kind of do this pattern a lot where you see this thing, right? And the move that they're looking for is to tag that low again. So there was a lot of reasons to be, and we got this PA at the highs. There was a lot of reasons to be bearish when we were trading at like 80K, high 70s. But I think I'm seeing a lot of guys on my timeline now calling for, for 40K, for 30K. And while I do think we will eventually trade there, I think if you're only now flipping bearish, you're late to the party and you're asking to be wiped, to be honest.
Yeah, I mean, not gonna lie, I don't think the bottom's in. And I'll say that with a little bit of respect to a lot of people who are probably trying to put positions on, but I think people are going to bid way too early. Whether we get any sort of relief right now or tomorrow or this week, in my opinion, it's just another setup to go a bit lower. Bottoms, this, like, if we're looking at what a bottom looks like, in my opinion, this is not really it. We need like a proper cascading liquidation to set up the runway for what could be the move for real relief. And whether that comes, tomorrow or in 10 days or in a month, I'm still in the camp that fall will be better times for bottoming scenarios. And I don't want to put on any extensive. I will say I'm really, really excited to swing for the fences on a levered long to the highs. Whether that comes in fall or whenever it may be, it's probably not right now. Way too much. And like we talked, like our colleagues talked about earlier on the show, this entire month is going to be very interesting. Lots of supply hitting the market. We have the SpaceX IPO. Obviously, we have 90 days of pillow protection, but I honestly think we're probably pretty close to a macro top on equities.
Yeah, and I actually couldn't agree more.
Dude, I hate trying to be the guy that's like, oh, this is the top. This is the top of the cycle, but it's like a pretty picturesque blow off top. And if it's not here, like maybe we get one more press. These types of moves, maybe we get something into like the 680s and then we get like one more press for the proper, candle that blows it off on a higher time frame. And that lines up with a SpaceX liquidity unlocks, right? I have SpaceX secondaries that I bought last year that I'm excited to get a hold of because of an ungodly amount in a really short amount of time. It's just unheard of for secondary markets to be so frothy. I was offered Anthropic in February at $300 billion and it's trading over $1 trillion. And I feel like a fool for fading that one. But I mean, the secondary market is just such a telltale sign of what's happening across the space at a psychological level. And it's just maximum froth. It's absolute maximum froth on every facet of markets. So
I think what we're seeing here, and you mentioned the IPOs there, like that is classic late stage in the cycle behavior, right?
Yeah.
Where we're seeing these giga IPOs. You mentioned the Anthropic IPO, the SpaceX IPO. We also have the OpenAI IPO. And if you look back through history, like these giga IPOs typically come, as you said, in a period of market froth, right? Because a company will obviously look for the best possible conditions to have these IPOs, these offerings, and that's usually an indication that you're closer to the end of that cycle, that narrative, whatever it is, than you are to the start. I think we look at, the Coinbase IPO back in 2021 basically top ticked that 2021 bull run. You look at the Robinhood IPO back at the pico top of meme coin mania, basically pico top that. And I think that, we're probably going to see some kind of event that tops equities this time around with these giga IPOs, right? And this is something you might remember this chart. I shared this chart like 3 months ago when these streams first started, when I was a guest and yourself and Mayne were interviewing me. I said that I didn't think the bottom was in. I thought that we would probably put in a bottom somewhere around 40K. And I think that my view on kind of the equities market on this, I don't want to call it a bubble, but this
Yes,
AI tech boom that we're at, right? Well, there you go. I think that we're going to see that's going to be the event that marks the cycle bottom for BTC. It's going to take us down to the whatever it is, the low 40s, the high 30s, the low 30s. I think that it doesn't really matter. I'm not concerned about being the guy who calls the exact number, but I just think that, we're going to see lower prices. We're going to see some kind of macro catalyst that's going to take us to a cycle low. And at that point, it's really up to you whether you have the confidence in your own read to pull the trigger. But in my opinion, I think that there's going to be an opportunity to buy Bitcoin and catch it, probably something like a 4 or 5x on your investment, depending on
100%.
where you buy.
So excited for that moment. Follis, I got to ask you, what time is it over there?
It's like 10 past midnight because I'm in Ireland. So
Okay, not
I'm
too
just
bad.
I'm just waking up my neighbors by shouting about macro analysis through the
Oh,
walls.
that's so good. And Patty Pimblett's your neighbor?
Yeah, exactly. Well, he's Liverpool. I understand to you guys, we're all just the same muddle of accents over here across the pond, but he's in a different country and a different city. But no,
Unreal.
you
That's
could have just
racist
said
of me,
Conor
right?
McGregor and that would have been
I
totally
could have
fine.
said Connor. I just wanted to get a little more exotic with it. You know what I mean? I needed to try something new. Did you get to trade Zcash at all this last little episode? And for a little TLDR before you answer that question, for those of you who don't know what happened this week, a quick little rundown of what happened. Zcash was the leader of price action for the last 30 days, something along the lines, right? There was an exploit that went down, and what essentially happened was there was in simple terms, someone found an ability to mint infinite tokens in a pool that was shielded. So what that means is, and the worst part is they couldn't prove if the exploit was happening or not because of how Zcash works. But in theory, someone found a way to make tokens that didn't exist, hypothetically speaking. So that news came out around the 540 price region, and very quickly after that, price capitulated down about 50% to 250, where people were piling into shorts, and now we're almost up 2x off of those lows. So with all that being said, did you trade any of that?
I didn't trade it, although I have been watching with attention. I mean, it's an interesting one, right? Like I have a tweet on my screen here, which is just something that I put out yesterday because I was a little bit late to actually like catching up on what the news was. But once I saw it, I was like, what?
Yeah.
Wait, what? So for 4 years, this exploit has been live, and anyone with kind of knowledge of the Orchard system could exploit it with no on-chain signature because Zcash is obviously a privacy coin. So anything that happened, there would be no transaction history and no on-chain signature. No one would know. And this guy, discovered this with a one-sentence Claude prompt. The prompt was basically, "Can you find any exploits in this protocol?" And like it found some, right? So in theory, and I mean, like we're dealing with kind of maximum FUD hypotheticals here. I'm not saying that this is likely. I'm not saying that this is probable, but hypothetically, someone could have minted like infinite supply, right? They could have minted tens of millions of dollars of Zcash, and they're just holding it somewhere, ready to sell. And I think that's the reason we saw a 60% sell off, right? It was like a $10 billion protocol, and it sold off 60%. And you might ask, well, why is that? Maybe this, the FUD is overblown, but it's one of those things. As soon as people lose trust, as soon as investors lose trust in the system, they're not going to want to hold their assets in that coin, right? We saw Arthur Hayes dumped his entire position. I saw a bunch of like Zcash maxis that I've known for years have just gotten out because they just don't know. There's too much uncertainty around this coin now. And it's kind of, it's a pretty massive question mark, I gotta say.
Oh, Did I lose you? You back?
I think I'm here.
You're back. Oh,
Can you hear me?
I was gonna be solo. That's crazy. Yeah, I hear you now.
Yes, I mean it's an interesting one. I mean, with these privacy coins, it's like trust in the protocol is everything, and as soon as that trust is breached, then it
Yeah.
really undermines investor confidence.
100%. And it's funny because like you look at this chart and then anybody who trades on technical, analysis would be like, oh, well, that was obvious because it's the head and shoulders and it broke below the neckline. So you could have easily taken a trade there. And it's always the case that some crazy headline lines itself up with like what would be the perfect pattern in a chart. So, I mean, it's ironic, but I'm probably like, I don't care what happens. I'm probably going to have to take a short at like the 480 region. Probably like not a bad place to scale from 460 up to 500.
I mean, I was going to ask you, what's your take on this long term? Do you think this is kind of Zcash is just going to bleed back down, or do you think the foot is overblown and we're going to bounce hard?
I'm not a Zcash maximalist, nor I honestly think like I love privacy, but I think it goes against like regulation, and anything that really, headbutts regulation probably ends up being pretty bearish. So with that said, I'll probably trade it until further notice, but I'm not going to hold a long-term bag. And we are now rolling up on the 7:15 marker. We are pretty excited to announce a guest here, a guest who does a lot more than what we do here in trade. We have Thomas Perfumo from the Crack. He's the Kraken chief economist. So let's bring Thomas into play. Hello, Thomas.
What's up, guys? How are you?
Good, man. Did I say your last name correct?
Yeah, it's pretty good.
Cool. Lovely to hear. Thanks for coming on.
Thanks for having me.
Dude, so I'm going to start this off by asking you a very simple question. A question that we actually prepared questions, but this was like the first thing that came to my mind. And it's, what does a chief economist do? Like, as a chief economist, what is your responsibility?
It really depends on the company. You have chief economists at a bank, of course, and they tend to focus a lot more on economic conditions, how that impacts lending conditions, credit markets, etc. Google has a chief economist, for example, that helped design some of the auction systems for their ad platforms. I'd say from Kraken's perspective, when I was looking into designing this role, it's something I actually pitched about a year and a half ago.
Nice.
It was really with the premise of we're in a market where for the last 2.5 years, the marginal buyer of crypto, of Bitcoin in particular, has really come through equity markets. And so the hypothesis that I had was crypto is becoming increasingly correlated with financial conditions that exist within the equity markets. And so it'd probably be a good idea to have someone that spends their day trying to study what's going on with the broader capital market, traditional finance, et cetera, and then trying to explore whether that creates opportunities internally at Kraken from a strategy perspective, also externally when it comes to thought leadership, talking to clients, things like that.
Very good. Okay, that makes a lot more sense. I'd love to hear that. So tell me this, it's natural that we ask you this because this is a trading show, but at what level are you an active trader?
I actually probably been trading more the last 6 months than I have in years. I'm not a day trader, just to be like very clear up front, and I'm definitely not a chartist. But I really like to trade against the zeitgeist. I'm a pretty contrarian kind of person, and
Nice.
I really like these kinds of environments where you have these kind of like washouts where you see crypto just like ducking 15-20% in a week while equity markets are doing great. For me, that's kind of the market that I tend to be a little bit more active in, but my time horizons are usually between 3 and 5 years. And so when I'm like actively trading, it's more from like an allocation perspective. I'm trying to figure out like what levels I want to participate and am I underexposed versus where I want to be. And so I start to build an allocation over time, generally speaking.
So with that, what's your read on what happened? We're down, at least from the highs of January or October, we're down a significant portion, almost totaling 60% at this point. What is your read on Bitcoin's weakness, crypto's weakness to the entire market, and equities decoupling, sending us to a completely different place?
Yeah, I'll start answering this by framing how I thought about crypto markets coming into 2026. So I did a write-up internally at Kraken, thinking through just my thesis around market direction for 2026 around December in 2025. And I broke it down into two parts. One would be like crypto specific, the other would be more macro, everything that has nothing to do with crypto. On the macro side, the broad hypothesis was we're going to get an easy kind of monetary landscape. The idea that, you might have 2, 3 rate cuts in the US, possibly a new Fed chair that might be more aggressive when it comes to balance sheet expansion because it helps solve some of the long-term interest rate issues around mortgages and even refinancing at the U.S. Treasury, for example. And then from a equity market perspective, which again I think has been much more highly correlated with Bitcoin over the last couple of years with the ETFs, really. I was a bit nervous coming into this year because I thought if we had a divergence from expectations, like for example, companies saying that they were going to slow down spend on AI capex, for example, that would actually probably lead to a pretty bad bear market for equities. So I was a bit nervous on that front. So it was a mixed bag. Now, ironically, it kind of flipped on itself in the sense that when it comes to AI, the companies have even more conviction. The spending numbers have gone even higher. Ironically, it's been somewhat of a net negative for crypto because it's created this like speculative boom for AI and semi exposure in the market, and so people are leaving behind crypto and chasing those names, a kind of a capital rotation story. And then also when it comes to capital, you see some of the big companies like Meta, like Google, Amazon, Microsoft talking about fundraising because they need to raise money to invest all this capex. And these are companies that historically printed a lot of free cash flow, and now they're coming to the market and saying, "Hey, we need your dollars so that we can grow our business." And that's also a problem for Bitcoin in the sense that Bitcoin's very sensitive to liquidity conditions in capital markets. When you have this like liquidity suck or when there's not new money being printed, that can be a bit challenging for crypto, in my opinion. And then on the Federal Reserve side, on the monetary policy side, we've had a complete reset. Instead of rate cuts, we're now the market's pricing over 50% chance we get a rate hike by year end. We also picked a new Fed chairman, Kevin Warsh, who has been very critical about the size of the balance sheet. And so in many cases, I would say that my views coming into 2026, we've had a much less favorable monetary policy side from a macro perspective. And on the equity side, we've had this massive boom in this competing narrative that is AI, semis, et cetera, that is sucking up a lot of excess capital or discretionary capital to invest. And that's being really, I think, taken away from crypto and Bitcoin. And to me, yeah, the story this year, you see it in the ETF flows too, is one where Bitcoin is just having to compete at the forefront with some of the most hot investor narratives, and it's just not winning the battle right now at this moment. I do think, tactically speaking, the SpaceX IPO is probably like one of the biggest acute events that's going on, and that's launching supposedly next Friday. And so my suspicion is that for the next week, it might be a bit challenging for crypto.
How do you think
Thomas,
that ends?
Oh, sorry, go on, Ponzi.
Sorry, how do you think the SpaceX IPO ends? What, are you bullish or bearish on this event?
Oh man, it's such a big IPO. It's so hard to say. On the bearish side, when I read things like Fidelity lowering the minimum from 500K to $2,000 account sizes,
Not right.
I've heard big wealth managers who are now making it possible for people to buy into the IPO with their retirement accounts. And this is the first time they're allowing that.
Yeah.
Those kinds of things to me make it pretty clear that they're pulling all the stops to maximize distribution because they feel that that's like necessary. It makes me feel like the institutional participation isn't going to be clearly enough to satisfy that $75 billion ask. But it is also the biggest IPO in history. And so it's kind of hard to know like what is signal as far as whether it's a bear or a bull signal. The nice part is that, throughout this week, you're going to get those typical headlines about how over or undersubscribed it is. I suspect that if you don't see the typical, hey, this is 2x, 3x oversubscribed, that it might start to bring on some bearish signals. I also saw some, I think, pre-IPO markets that started to price down over the weekend, I believe. So I'm pretty binary on this. I think it's a coin flip. I really I couldn't tell you. Yeah, I couldn't tell you if this is going to be like a net bearish or bullish event for that IPO. And it's a bit, I hope it's bullish in the sense that if it's very oversubscribed,
Yeah.
people receive less than their allocation. To me, that's what that's going to indicate is that there's a lot of dry powder now. People didn't get the shares that they wanted, and now they have to redeploy it into something. Crypto could be on the favorable bid side for that if people see that the price is good for them. So we'll just have to see. But yeah, right now at this point, I think it's like a coin flip.
Thomas,
Nice.
really great to have you on the show, and it's interesting because we actually had many of the same conversations. We had a call just a few days ago, so it's really nice to be able to chat to you again. I'm really glad that you touched on Warsh and the Fed, and I guess the difference in expectations in terms of monetary policy, maybe for the majority of crypto participants, because that's the sense that I'm getting from the guys in my community. That's the sense that I'm getting from the traders on my team is that, just as recently as 6, 7, 8 months ago, we were all talking about, oh yeah, Warsh coming in, Jerome Powell stepping down. We're going to get more liquidity coming into the system. We're going to get, increasingly, rates are going to continue to drop. The Fed is going to continue to I guess to ease monetary policy and allow for some breathing room. And instead, now we're getting, as you say, over 50% chance of a rate hike. We're seeing tightening policy, a complete pivot from the Fed, and now we're kind of seeing certain asset classes take the hit, but particularly crypto. You mentioned that that has kind of changed your view. Do you think that that's the case for the majority of participants, where they're kind of, I don't know, they're kind of a little bit disappointed in one way, or maybe a little bit. I sense like almost this kind of like confusion maybe among the average crypto market participant. Guys expecting one thing, getting another thing. So I guess my question is twofold. Do you think that that's kind of a fair appraisal of the crypto community, the average trader on the street? And do you think that that is something that's kind of set in stone now? Do you think that that's the monetary policy that we have to look forward to for the rest of the year under Warsh and indeed into the future?
Yeah, I mean, confusion is definitely warranted because if you remember, a lot of people, I think probably 6, 7 months ago, were talking about the correlation between Bitcoin and M2 and the divergence between the two. And in my opinion, a lot of that just straightforwardly has to do with, M2 can grow through money printing at the Federal Reserve, where they're just injecting capital into the market, or straightforwardly through credit creation through banks, doing originating loans and stuff like that. And what we've seen really is that M2 has been growing, but if you look at the Federal Reserve balance sheet, it's been on the decline for the last 2 years, significantly so, at least in the US. And it wasn't until December of 2025 where we stopped the tightening program. We're a little bit higher, but we're really not materially higher than we were 7 months ago. And so a lot of this divergence, I think people have been focused on that and saying, oh, there's going to be this like retrace higher because the chart is so dislocated. And I think the reality is that the mechanism by which that would have happened, in my opinion, would have been picking a Fed chair that would have been able to generate enough consensus for or conditions around expanding the balance sheet once more. And if you think about it, this is the interesting thing about this regime is that the only time that Bitcoin has existed in an environment where central bank balance sheets were declining was really in 2022 through 2025, call it around that time frame, probably 23 and 20 to 25. And that corresponded with the launch of the Bitcoin ETFs. So even though you had a tightening backdrop from a liquidity scenario, you had this new distribution channel that was gangbusters. It broke all the records. And so in some respects, it kind of masked, I think, the macro tightness that we were seeing on the Federal Reserve side. And we don't have that right now. Bitcoin ETFs are not buying Bitcoin. They're net down on the year in terms of capital flows. And meanwhile, we still have this tightness on the liquidity side. And then on top of that, you have to compete against the federal government borrowing a lot of money, AI fundraising a lot now to put money in the ground in the form of data centers, et cetera. And so I think people have been very confused. And when it comes to the Federal Reserve policy, the truth is that in some respects, it became much more political or politicized over the last couple months, call it 3, 4 months, in a way that like impacted the operational expectations. So a simple example, for 80 years, it's been standard practice for exiting chairs of the Federal Reserve to step down from their board governor position once their term is up as chair. Jerome Powell broke that tradition, basically saying that he's going to stay on as a voting member because he feels that Fed independence is threatened. And so all these different paradigms that people built, let's call it like an archetype around or an expectation around, we've broken through like so many different versions of it that I think people are just getting caught off guard left and right, and myself included, to the point where the only thing that changes the monetary trajectory right now is this seemingly binary, are we going to get a near-term resolution with Iran or not, in this war that's going on? And so, yeah, I think your assertion that, traders are getting caught off guard or confused, I feel the same way myself.
Yeah, that's super interesting.
Yeah. I want to ask you, what are your thoughts on what happened with Zcash?
That makes total sense to me. I think in the sense that the magnitude of the drop makes total sense to me because the potential risk that existed in the sense that, hey, there was this exploit, we don't know if it's been exploited. The idea that you might have this massive overhang at any given time, like you just can't trust that model, right? As a trader, as an investor, I don't know if I'm dealing literally with like a poker machine that's just like printing tokens, and I have to be the bid against that. And so I think the magnitude of the drop makes sense. I've also felt that Zcash in a lot of ways was kind of like a clicky trade. You have a lot of very notorious crypto investors, longtime crypto pioneers in the space that were really propping it up. Folks like Barry or the Winklevoss twins, etc., that have been talking about Zcash for some time, even Balaji as well. And so I think there was a kind of a trade being built around this idea that these prominent investors own a lot of this coin and that they're long-term holders of it. And when you see any kind of shakiness, like Arthur Hayes coming out saying, "Oh, I just sold my entire position," then all of a sudden it feels like the trade's just not going to work with you. So even the traders and the investors, I think some of their thesis was like fundamentally compromised to a point where there's really just not a bid for it. That was my interpretation.
That makes good sense. What do you think of Michael Saylor? I'll start by asking, is the strategy, is Saylor a liability with the current choke on supply that he has? And then I'll follow that up with, what do you think of his most recent sale? What was the intention? How did the market interpret that? And what's your interpretation of it?
Yeah, I'll start with like my philosophical view. I'm very much the kind of like crypto libertarian person. So I believe that anyone should be entitled to be a free market participant for Bitcoin. And so if you have a corporation buying it, it is what it is. I'm all for it. So I have nothing fundamentally against corporation like MicroStrategy existing and buying Bitcoins. On your question around whether it's become a liability, it's hard because at the same time they're a massive asset to the at least to the price action. If you think about, let me give you some stats here. So since January 2024, between the Bitcoin ETFs and MicroStrategy, they've bought a combined, I believe, $112 billion worth of Bitcoin in spot markets. And mind you, that's like the same number as the entire market cap like 6 years ago. It's just a massive bid. And MicroStrategy alone represents $58 billion of that figure. And I don't view them as that different from the ETF. To me, they are just straightforwardly more of like an actively managed closed-end fund, where they're not, selling Bitcoins. They've been buying every single year for the past 6 years. And so I view them both as just equity market demand or exposure to Bitcoin as a proxy for investors. So people like to call him an overhang the same way they called him an overhang back in the last bear market. I tend to think of this being more of like a sentiment thing around price movement than it is fundamental. I I don't know that he's crossed like some kind of red line where, owning more than 4% or 5% of Bitcoin's outstanding is suddenly a big problem. Like I don't see how that fundamentally is a big deal. But in the reality is in this environment where Bitcoin is down 50% from the all-time high, he is an overhang. Like I can't ignore that fact. That's what people are going to believe. And so I think what people expect from him at this point is to uh, position the company such that there is no good short thesis around it. So, for example, earlier this year, and at let's say the latter half of December, they did that big USD reserve raise, $2 billion on the balance sheet, and they were propping up this is 2 years plus of dividend payments. So, from as a short thesis, if you were hoping that they'd be under some kind of pressure, well, it wasn't really going to be the case. You'd have to hold the short for 2 years. That's an insane amount of time for someone taking that kind of position, a lot of risk involved. And now I think in his decision to buy back the bonds without fundraising that week, that's the critical part.
Yeah.
I think put the company in a position where the short thesis around, hey, you're going to run out of timeline on the dividend payments resurfaced and it became a problem. And so, yes, he's a short-term overhang, but I think the company does fundamentally have much more flexibility than people give it credit for. I wrote an article on X called Popping Balloons, and it talks about how, if realistically, from a cash management perspective, there isn't something that could actually force them to liquidate their collateral, their Bitcoins, except for an event of default with their convertibles. And the earliest time that that would happen would probably be around 15 months from now. And so my expectation is that we would relitigate that problem, call it 10 months from now, assuming that nothing changed. But his decision to not fundraise and draw down that USD reserve, I think, compromised some of that thesis. So I'm not particularly worried about it, but I do think he's become an overhang for the market. It can go away as quickly as it came, in the sense that if price action gets better, people are going to forget about this, in my
Yeah.
opinion. But I think it would be worthwhile for them to top up their USD reserve more quickly than what I think they said over time, just to expel that thesis around the short side. So we'll have to see. But yeah, for now he's definitely an overhang.
Nice.
Thomas, one of the issues that Ponzi and myself were discussing just before you came on was, I guess, the state of the equities market, and the word that we used was bubble. It's a word that I'm kind of hesitant to use because because I don't really know enough about economics, and I'm basically I'm not smart enough to use that term without knowing whether I'm not making a fool of myself. But I'm hoping you are smart enough. In fact, I know you are. So I'm just curious to know what your thoughts on this current. I mean, it's crazy to say because equities is putting in all-time high after all-time high, even though we did have a pullback last week, a small one at that. Um, I mean, it's interesting because if you look at, I don't know, I saw something where it's like of the I don't know, is it the 11 or 12 main asset classes that form the S&P? It's like nine of them have underperformed the index, and the only two that have outperformed are obviously tech and communications, right? So it's like, to me, it seems a little bit unstable in the sense that it's really being pulled by the tech stocks, the AI stocks, and obviously now we're having this, in my opinion, this late stage cycle indicator, which is these, these three giga IPOs, OpenAI, Anthropic, and SpaceX. So I'm just curious to know, A, kind of what your take on that is, and whether or not you think that it's, that it's true, and kind of B, like, what's the knock-on effect of that for crypto? Because I'm seeing a lot of guys talk about the inevitable rotation, right? And I'm kind of skeptical about that. I think that actually AI stocks pulling back would probably bottom the crypto market, but I don't necessarily think it will result in immediate capital or liquidity rotation like some seem to think.
When you say rotation, you mean like re-rotation back into crypto?
Yeah, something like that,
Yeah.
right?
Yeah. Oh man, it's so hard. I think so. My point of view is that I struggle to make the exact same comparison to the bubble of like like the 2000 internet bubble, in the
The
sense
dot-com
that,
bubble.
correct, in the sense that the the level of adoption associated with AI technology is strikingly different than a lot of the use cases for internet companies back in the early 2000s. What I mean by that is, if you think about the speed by which consumer behavior can shift and fundamentally drive value through AI tools, it's not like, oh, I'm starting Amazon. It's an internet e-commerce business, and I have to wait for consumer behavior to shift towards being comfortable buying stuff online and getting it shipped to their house. Like, that's a fundamentally bigger task than saying, hey, I have this tool, you can prompt it and it'll help you make decisions or code or whatever. Like, the speed to value activation, like fundamental growth, I think with AI tools and AI in general is much more easily realized than a lot of the fundamental underpinnings of what people got excited about in the dot-com bubble. And so, like, it's insane to me to think that Anthropic is been growing revenue the way it has been. And so it's hard for me to say that, hey, like, this company went from a few $100 billion of valuation to $1 trillion of valuation in a few months, but at the same time, their annual, run rate revenue grew like 5x over that period of time. And they actually realized it, right? So I don't like to say that things are like a bubble, because I think the fundamentals are actually growing so rapidly with it. The only question is whether the fundamentals continue to grow this kind of exponential pace, or whether they bottom out more quickly than I think price action is giving it credit for. To your point around this discrepancy or this divergence between AI, tech, networking versus everything else, that is a real thing. And I think that's actually creating a lot of mixed signal, in my opinion, where people think that, hey, like, equities markets are doing great, despite the fact that we have all this geopolitical uncertainty, despite the fact that, the labor market feels like it's a little bit softer, like, things are great. But the truth is that it's great in a very narrow corner of the market, and a very narrow kind of new emerging growth industry. And what scares me a little bit is that I think it doesn't mean that you necessarily have like a big bubble pop, the way that you had in like the dot-com bubble that like bleeds into every other part of the economy. But I do think there is heightened, call it like tail risk, because this has like a pretty meaningful wealth effect, and because the underlying other components that we're talking about here have not been performing well. And so if people flip from that signal of, oh, everything is great, to, oh man, like, everything's not so great, you can quickly turn into more of like I would call it like a light recessionary kind of trajectory. And so that's the tough part, is that I feel like the signals and the price, the market signals and the underlying fundamentals in the economy, with the geopolitical risk and whatnot, leads to this kind of event where you have some upside left too, but that tail risk that you have, like the probability curve, is actually probably fatter than people appreciate. And so when it comes to investing in this market, I'm pretty heavy on cash. Like, I have a pretty good cash allocation right now. And my thesis straightforwardly is I just think we're in a higher vol environment. I'm still participating. I have equities exposure, I have crypto exposure, but I have plenty of cash, because I do think, to your point, if you do have like what we had on Friday, where you have a big rotation out of AI, a big deflation of the price action there, like maybe it goes down another 10, 20%, whatever. Crypto's going to get probably taken out for a ride too. And I want to have money set aside to be able to deploy again with that kind of 3 to 5 year time horizon that I personally live by. So yeah, I would say I'm a bit nervous, but also optimistic. It's just this, like, both tail risks are just a lot fatter in this environment than I would like them to be.
That's fair. Unfortunately, we only have 2 minutes left with you. And with those 2 minutes, I'm going to do the same thing we do with every single one of our guests, which is hold you extremely accountable for whatever you tell us on this next answer. Do you think the bottom is in? And if not, although you may not make predictions on price or time, we are forcing you to make a prediction on both time and price. What are, if hypothetically speaking, where's the bottom?
So I actually really like that 200-week moving average, which was around 61.5K. And I'm not fully allocated, but I did buy some as it crossed over, I think just under 61K, on the premise that, it might bounce off of that. I still have dry powder because of what I've just mentioned about this like fat tail risk discussion. And
Yeah.
if I'm going to use like a corollary with other markets, other bear cycles, like a 75% drawdown would bring us to what, like 30, 40K. And so to me, that would represent like, hey, like this is a level where everyone's gonna like put a like just punt money into it because they feel like this is the end. That's as low as it's gonna go. And
Yeah.
so I'm like allocating down that range if it does happen. I think it's gonna be really dependent on this like AI capital rotation that's happening over the next few weeks and months. And then the only other thing from a time frame perspective, I'm not a huge cycle believer myself, but everyone wants to hold off on buying until October. They just believe in that like 12 months since the last peak thing. And so if you ask me, like that tends to be the moment where anyone who had a reason to hold back outside of price is now not holding back. And so I'm looking forward to fourth quarter of this year as well.
Wonderful answer. Incredible confluence on both Follis, I, and even Dylan. And with that being said, we totally recorded that and we will be holding you 100% accountable. And if it doesn't happen, we'll be calling your phone. Thanks for coming by.
I own crypto, man, so I'm gonna feel it. Don't worry.
Thanks for coming by, man.
Thank you.
Thanks, Thomas.
Bye now.
Whoa, insane comment coming from Rect Proof. I'm not sure if that's his real account or not, but Rect Proof is in our comment section saying bottom is in. Oh, Follis, what did you think of our good friend Thomas's predictions there? Are we gonna have to show up at his house with pitchforks?
Well, the first thing is it's always nice to talk to people who are like manifestly just way smarter than you, and it happens all the time in crypto. So I mean, the way I put it is it's a uniquely humbling experience. But what I really mean is it's very easy to discern that you're not the smartest guy in the room, and that's a good thing. But yeah, I mean it's so interesting talking to guys like this. They know what they're talking about. They have their finger to the pulse when it comes to the global financial markets, the global economy. Because yeah, I guess like we're kind of in many ways, we're kind of at the cold phase. We're kind of seeing the net results of all this fiscal policy, monetary policy, fairly high level decisions. And then, you get someone's like, hey, why is my bag of Fartcoin down? And it's like, well, actually, there's a pretty connected string going all the way up to the top. And it's it's a funny thing because in crypto, we kind of get lost in the sauce a little bit, but everything is correlated, everything is connected. And, you look at, and one of the things I was super interested to talk about was this pivot by the Fed over the last few months, where as Thomas mentioned, now instead of looking at Warsh coming in, or rather the new chair coming in and potential cuts on the table, we're now looking at tightening monetary policy and less liquidity. And this is going into a crypto market that's already down 50% from the highs, right? So it's like. Yeah. You're looking at this and you're saying, okay, so you're telling me that there's going to be less liquidity going forward, and and for me everything is aligning for the bottom not being in. I think that we're going to see a probably some kind of pullback on equities later this year. As I said, I think it aligns with my views on where we are in this tech bubble, this AI bubble. And when that happens, it's going to put a bottom into crypto. And I don't think equities needs to pull back that much to tank crypto or to bring it to its bear market low. I know Thomas was kind of goofing on the October idea, saying that everyone looks for that 11, 12 month bear market, 11, 12 month pullback. But I think that there's a lot of confluence to suggest that we do bottom in Q4. Let's say equities gives a 15% pullback, 20% pullback. Let's say there is some kind of a burst of the bubble. I think that's going to bottom the market. It's going to take BTC to a level of, capitulation. And I use that term loosely because it means different things to different people, but it's that level that people will give up on the market. People will say that Bitcoin's a scam. People say that it's a failed experiment. I think something we mentioned before, Ponzi, is this idea of realized price. It's the average price for all Bitcoin holders in the market. Currently, it's about 54K. Now, we have never bottomed. A bear market has never bottomed in previous four cycles, but it's spending some kind of time beneath the realized price. I think that's going to be the thing that bottoms us this cycle, as we go below the realized price, which is, as I said, 54K. We go into the 40K range. Everyone gives up on crypto. Everyone says it's a scam, and that's when the bottom happens, and we see higher prices over the next few years.
I completely agree. Couldn't have said it better. Couldn't have said it better myself. Chat, by the way, if there's any guest that you specifically want to see, throw some suggestions in the comments, and we'll do our best to bring them out here over the next coming weeks and months. I did just now see a little hype trade setup that I think I'm going to take over the next 48 hours, and it's fairly simple in terms of like a little technical structure that I like. I'd like to say that these bottoms don't get tested. I'll draw my stop slightly, slightly below there. And I think we may press into like the 62.5 area over the next 48 hours. So I did just take a cheeky little long, as you guys would say over there on the other side of the pond, targeting. And I think that's the 4-hour heuristic that kind of lines up with that. Yeah, it is. So somewhere around here, ideally, as long as we don't get any bombs, and we got a little BTC low time frame press up into probably fill that wick that we saw with that headline. You got any trade setups for me that I can take and copy trade?
Hype is an interesting one. I was actually going to ask you, have you been trading Hype or LIT? Because these two coins are pretty high on my watch list. Interesting that you mentioned Hype. Interesting that you mentioned a setup. For me, Hype has just entered this kind of weekly inefficiency that I've been looking for a reaction from for a while. You probably know my trading style by now. I really don't like chasing moves. I really don't like being the guy who top blasts and ends up with a sweaty, uncomfortable position that I need to endure any kind of a drawdown. I much rather wait for price to pull back into my level, for it to tag some inefficiencies or POIs or order blocks or whatever it is. And then I usually try and catch that next leg up after we get a little bit of a pullback. So for me, Hype literally just in the last 24 hours has entered this weekly inefficiency, this pullback zone that I'm now looking to get involved. We've seen a 26-27% pullback from the high. This is where all the top longers, all the guys who were chasing this move up here have now been hopefully forced out of their position. I think that this is where, so I usually look, this is where I kind of go down to the low time frame and I look for structure to develop. So we can already see here that we're getting this kind of low time frame range. This is my bread and butter. I love to see this stuff. So if we kind of draw this range here, I'm just looking for some kind of consolidation here, and I will play for the breakout, and like that would be your trade. So you would wait for this low time frame range to resolve to the upside, and then you kind of bid the retest here, something like that. And I think Hype is strong, man. It's strong on multiple different time frames. It's strong fundamentally, it's strong technically. This is one of those ones that you can probably target a pretty big move back, maybe a rotation back into this order cluster here around the high 60s or even low 70s. I think there will be a trade here over the coming days. I think one to watch for sure, Ponzi. Have you been did we lose Ponzi? Okay, I think we just lost Ponzi. No worries, I will take over from here. But one of the questions I was just about to ask Ponzi is whether or not he was trading LIT. This is obviously lighter. This is the hyperliquid competitor, one of the main competitors to hyperliquid in the perp deck space. And I think that we've seen over the last whatever it is, over the last kind of month or so. I mean, we saw this huge move off the bottom between mid-May and kind of the start of June. It was like a 120, 130% move from LIT. And a lot of that was a sympathy play. It was lighter pumping because hyperliquid was strong. Usually when coins pump, when you get a narrative like this, you will look to see what other coins are part of that narrative, what other coins are potentially going to get a sympathy bid. And I think that's what we saw here from LIT. Very, very interesting coin here. From a technical POV, obviously we had this bearish market structure from like earlier in the year all the way down. We had lower highs, lower lows, lower highs, lower lows, this consolidation at the low here. And then finally, we had a break in structure, and now price putting in some bullish price action, some constructive price action. This is beautiful. You're back, Ponzi. No worries at all, man. Good to see you back. We lost you there for a second.
My computer crashed. That was crazy. I have no idea why. It's probably why I probably need new hardware. I've been putting it off for too long, but that was the signal.
No worries. We're just talking through LIT here. I'm wondering, is this a chart that you've been trading? I was just making the point that it's catching a sympathy bid, or over the last 3-4 weeks, it's been catching a sympathy bid based on hyperliquid strength. Obviously, this is one of the main coins in the perp deck space, and really, really nice, not just from a fundamental point of view, but from a technical view as well. We're getting this bullish price action off the lows here after a period of consolidation. And I think that this is one that could potentially make a run on highs. It's very like, it's one of those charts that actually is showing strength off the lows after a period of consolidation. And I think that, if it plays any kind of a catch up with hyperliquid, you can still look for a 50, 60, 70% move from here to put in new highs. Is this a coin that you've been trading?
I am so glad you brought this up because this is something that both Mayne and I have been talking about literally since the day we started the show. And if you take a look at my my chart here, I made this chart back when we start, like I think on our first or second episode, and we've got to watch it unfold. So all of you guys who have been watching since day one, you actually get to see us talk about this for months now. And the way we came up with this chart was that you started to see sell off slow down, and then you started to see kind of this consolidation bottom, and then finally we got this breakout of this kind of like descending wedge looking thing. And I personally was able to trade it. I round tripped houses in throughout this wedge, thinking that the next attempt would be the actual break. I did thankfully catch this $1 move to like, I don't know, $1.40, and then I caught $1.15 to $1.60, and now I am flat on lighter. But I would be glad to reposition. I just think it's way too much of beta to hyperliquid, and if hyperliquid decides to sell off, then we probably see the same come from lighter. But as of now, it's looking great, dude. And I will be glad to bid it. I didn't get to see your chart. Where are you looking for bids on this thing?
Let me jump back into it. So basically, the point I was making on this is, very similar to your chart. We had this bearish downtrend for quite a few months, and I'm not interested in catching knives. Like, I do not like to fade high time frame downtrends. I don't know how many guys I saw on my timeline hammering in longs into the order book here because they're saying, and these are all valid arguments. They're making fundamental arguments. They're saying, well, lighter is it's extremely used protocol. Lots of guys trading on it. Lots of volume. They have this. They have that. At the end of the day, that may be true, but you're bidding into a high time frame structural downtrend here, and you're effectively it's the worst type of knife catching. I'm not interested in bidding that. When I see this consolidation at the lows, however, that's something that I become incredibly interested in bidding, right? Because this is a sign to me that the trend is becoming exhausted and might be about to reverse, right? Then we see this pop up here to put in a new higher high, the first higher high in months. We put in a higher low, another higher high, and now we're seeing that second higher low. This is exactly where you should be looking to get involved, right? Because you have clear invalidation, you're trading with the trend, but the potential upside is huge because we're coming off a pretty massive downside move. So it's like, even if you're just bidding some kind of mean reversion here, you can still potentially target like, a 60, 70, 80% move to the upside. So for me, this is the same idea as hyperliquid, maybe even potentially more upside potential, looking for longs kind of at this level. And I'm just looking to play the bullish continuation here, continuation of the bullish trend. A chart request that we got in the chat was VVV. And this is a really, really interesting one. I would love to get your thoughts on this, Ponzi. I'm going to share, there's a chart here. I think I should be able to screenshot this. Yeah. So this is CoinLines. This is order flow for dummies, as I call it. I'm sure you use something a little bit more complicated, but obviously VVV is like one of the absolute chads of this year. It's like up 2,000% since the start of the year. Crazy run. Everyone's trying to time the top here and wondering when it's gonna reverse, or maybe just look for bullish continuation. The thing that worries me about this chart, and I think you probably see it as well, is this. This is the CVD for perps versus spot, and you can see here that effectively this is just a perps bid. There's no spot bid to be found. It's being propped up by perps. Every push up actually has spots selling. I think this is a house of cards. I've been saying to my community for a while now, I think VVV trades way lower over the coming months. I think this is one that's going to collapse.
I actually love that thesis. And I say this with one, recognizing my own bias of missing moves and then immediately pivoting to being a bear on the asset if it's like, in my opinion, overvalued. But this in my opinion, does look like somewhat of a distribution. And that price action from 12.5 to 20 and that volatility, and it just reminds me of a proper distribution. And I agree with you. At this point, like, who's the marginal spot buyer on this asset when it was trading at 90 cents not too long ago? That doesn't mean that the overall cycle of VVV is over. It means that we probably get that 61% pullback that would give it enough fuel for the next leg higher.
Yeah, I think that it's something that I've become increasingly just skeptical of, is these coins that put in huge upside. I mean, we've seen it this cycle so far with Rave, with Lab. We saw it last year with Mix, with I think it was Co-AI, with Blue AI, right? It's like every month there's a new coin for Zach XBT to do a thread on about insider trading and cabals pumping the price up, 10,000% and then dumping on retail. And it's just one of those things where, for me, if I see a coin that's up, 800, 900%, 1,000%, 2,000%, whatever it is, I'm just automatically not interested in trading it until I see something that makes me really want to get involved. Because my assumption there is that the supply is bundled, insiders are profiting, and if you're jumping into this thing late and assuming that it's going to be an easy ride up or down, whatever it is, you're playing in a game that you're at an immediate disadvantage. And that's why I usually advise maximum caution when it comes to trading these types of coins.
I think that's the best advice to leave the show off of. Everybody, thanks for coming by. Follis, thank you. Thank you very much for taking care of me and holding my hand when my partner, Mr. Mayne, has left me to rot all by myself.
He's sick. And, he has a sick tummy, is what he told me in DMs. So we wish him the best. Yeah, like I know. Yeah.
Everybody have a wonderful evening, and we'll see you next week for the crypto closeout on Sunday.
Thanks, guys. Enjoy. Thanks, guys. Thanks, Fonzie. Take it easy, guys. Bye-bye.